Good morning, everyone. This is a live daily market outlook of Windsor Brokers for Wednesday, 5th of July 2012. Full calendar today after yesterday's holiday in US Independence Day, where the markets were rather quiet, and most of the instruments actually are on sit and wait mode ahead of today's key releases of Bank of England, European Central Bank, and also data from US that are going to be the indicator for the coming non-farm payrolls due tomorrow. As focus turns towards the central banks, the Bank of England is basically expected to fire up its printing presses for a third round of economic stimulus just 2 months after shutting them down. The policymakers have essentially been forced to act by an increasingly gloomy economic climate, and have already pumped £325 million into the economy, which nonetheless fell back into recession at the turn of the year. A raft of gloomy data nearly led the policymakers to push the button again last month after the bank had stopped its quantitative easing bond buying in May. The MPC was narrowly split in latest decision in June, with the Governor King in the minority voting for more quantitative easing, as darkening British and Eurozone outlook plays increasingly on policymakers' minds. The polls taken show that expectations for a new bond buying market this week, with most of expectations going towards 50 billion pounds injections, as the June was one of the Britain's worst months in over 3 years. Purchasing managers surveys showed in their releases this week, cementing views that the bank would be forced to act. Also, the European Central Bank on its today's meeting is widely expected to cut borrowing costs to a record low to support deteriorating Eurozone economy, and complement measures agreed by government leaders last week to tackle the bloc's debt crisis. Surveys show that expectations come to 0.25% cut of the rate on today's meeting, as the current situation in the Eurozone and the current crisis, without yet any firm and strong steps being materialized that were agreed on the last week's Eurozone summit, seen as the necessity for a further rate cut. The central bank is under pressure from investors and the International Monetary Fund to take bolder measures, with the IMF Director Christine Lagarde urging the bank to resume its purchases of government bonds, an unlikely scenario for now. The ECB's main refinancing rate is already at record low at 1%, and most of the economists polled during this week expected the bank to cut it further, with, as mentioned previously, 25 basis points being seen as the likely scenario for today. Further today, we have the data from US, the ADP non-farm employment change. That is basically the main indicator of the coming non-farm payrolls, and today's forecast is below previous release at 133,000. Today's consensus is 103,000. That also keeps a question mark about the tomorrow's release of US non-farm payrolls. Anyway, we're going to follow and see what is going to be. A quick look at today's calendars, also calendar to see the other releases apart from German factory orders due at 10 o'clock GMT are expected to improve by 0.4% compared to a draw of 1.9% in the month of April. Bank of England rate decision is due at 11 o'clock GMT. Unchanged the interest rate are forecast for today at 0.5% with the increasing of quantitative easing by 50 billion to 375 billion pounds. 11:30 GMT's US Challenger layoffs for June. We have no forecast. 61.9 thousand was the previous release, and the 11:45 is the European Central Bank rate decision. As mentioned previously, widely expected is cut by 0.25% to 0.75 compared to 1% current interest rate. US ADP non-farm employment change for June is due at 12:15 GMT. Set 103, 105 now, depending on the forecast is for today. 133,000 is the previous one. Important ECB press conference that starts at 12:30, where the President Draghi will give us some more clues about further steps of the European Central Bank that will be hinting the next actions of the Central Bank of Eurozone. U.S. jobless claims due at 12:30 GMT, 385,000, just slightly below the previous week release at 386,000. And the U.S. ISM non-manufacturing PMI for June is expected at 1,400 GMT, slightly lower than the May's release that was 53.7, 53.1 is the forecast for today. And finally, the U.S. weekly crude inventories delayed one day due to yesterday's Independence Day holiday in the States are expected to show further draw in the U.S. crude stocks by 1.9 million barrels compared to 100,000 barrels draw of the previous week release. And we're going to move now towards to the currencies and commodities and see the latest movements and expectations for the short term, basically for today. Yes, euro during the overnight session, late yesterday, an overnight session turned again into the quiet trading, moving within the narrow range in the sit and wait mode for the central bank decisions due later today. However, the outlook for euro remains negative as the pair's short-term price action remains under pressure on its reversal of 126.90 last Friday's high, as yesterday's fresh weakness broke below the platform at 125.60, extending losses so far to 125.07, basically testing our strong support and the break point at 125 zone that marks as previous high of 28th of June at 125.23, 125.15, 61.8% retracement of the move from 124.06 to 126.90, and 125.00 is around the figure support, as this zone has already been cracked and no significant action seen on the upper side due to corrective bounce on the oversold hourly conditions with 125.43 seen so far, and the descending 20 days exponential moving average on the hourly chart so far capping the upside action. A more likely scenario would be further extension lower, as we said the break point at 125 zone is expected to trigger fresh weakness and fresh extension of the down move from 126.90 with the 124 zone stronger support expected to be tested on a break below 125 with some interim supports at 124.40. Actually, it's another strong support on the way towards 124.00. On the upside, as said, the current range top at 125.40 zone is for now offering initial resistance and so far capped the upside action ahead of a previous support and the consolidative range floor at 125.60 zone. Basically only break above descending trend line at 125.75 and regain of 126.00 minimum would be seen more supportive for the single currency, while break above the 3rd of July high at 126.26 would provide relief and again 10 focus higher For now, pressure seen on the lower time frame charts shows the downside vulnerable, and the more focus seen towards the downside, with the further losses expected on a break of 125.07. That was the low. Latest one posted yesterday, and the 125.00 is around figure support. That will trigger further extension down towards 124.40 and 124.00. The British pound also remains at back foot after a successful attempt at 157 zone, with the brief ticks to 157.20, basically keeping the 157 barrier intact ahead of fresh slide. The loss of initial support at 156.40, that also marks the near-term range bottom, has so far extended losses down to 155.73. Strong support, 61.8%. Retracement of 154.84 to 157.21, ascend also previous low of 29th of June 2012. Brief consolidation has followed and bounced higher on the oversold hourly conditions, but so far not much seen towards the upside, as 156 zone still keeps the upside. The limited brief break higher to that spiked at 156.22 was all seen so far during the Asian session, as the longer-term descending trend line of 163.00 currently at 156.26, along with the descending 55 days moving average at 156.30, still keeping the upside limited. Immediate focus is still seen towards the downside, as 4-hour studies have lost its bullish momentum, and most of indicators broke below their midlines, keeping the focus more towards the downside, and the strong support at 155.35 trend line support. The bull trend line connecting 152.67 and 154.84 lows, break of which, along with the 155.00 and 154.84, to open way for a further weakness and further retracement of short-term ascent of 152.67 to 157.76, as the upside remains so far firmly capped by 157 zone and 157.50, whereas the 200 days moving average. Risk remains towards the downside as long as these two barriers stay intact. Risk will be seen on a loss of 155.00 and 154.84. That might open way for further weakness and confirm tops at 157.76 and 157.71. As at regain of initial barrier at 157.00 might provide relief, while lift above 157.21 and more significant 157.50 200 days moving average would bring bulls back in play. The dollar yen again lost traction after another unsuccessful attempt at breakpoint at 80.00, with the overnight's brief tick above this level to 80.08 was all seen of the upside action. Upside rejection at 80.08 has triggered a sharp reversal, losing initial support at 79.60, where is also the ascending trend line of 79.12 through 79.30, and the weakening immediate structure as the hourly studies broke into the negative territory and see more potential now for a further extension lower. A larger picture, however, still shows the pair entrenched within 79 and the 80.00 range, and basically at this point rather neutral mode is seen on the 4-hour chart, with break of either side to define the short-term direction for the pair. Immediate support on the current down move is at 79.30 and 79.12. That marks the range floor, along with the 200 days moving average currently at 78.92 and basic. 78.93, and basically break below 79 zone as a strong support would be signal of further weakening of the dollar-yen structure, with the 78.60 seen as the next static support on the way down towards 77.65. As the pair fails also to clear the 55 days moving average. Past a few days price action was seen hovering around this indicator. More pressure is now seen again towards the downside, as studies are slightly above their midlines, but showing not much strength for now. Regain of 80.00 is required to improve the near-term picture, while break and open 80.60, our next target peak of 25th of June. With break here, that also marks 90 days moving average on the daily chart, is required to signal further retracement of the longer term down move from a yearly peak at 84.17 that so far bottomed at 77.65. Regain of 81.00, where is also 50% retracement is required to confirm. Dollar Swiss near-term price action remains positive. The pair continues to trend higher off the recent low at 94.69 posted there last Friday, with yesterday's action above range, near-term range top at 94.60, extending again so far to 96. Our next target on the upside, that also marks the 61.8% retracement of the down move from 96.77 to 94.61. A brief consolidation was seen as the hourly indicators entered into the overbought territory, with the downside being so far protected at the 95.80 zone, where it's 20 days exponential moving average containing so far the downside. Studies remain positive on 1 and 4 hour chart, with stronger bullish momentum seen on the 4 hour one, and attempt of 20 days exponential moving average crossing above 55 days moving average on 4 hour chart, underpinning the current rally, and possibly opening way towards next upside barriers at 90 on a break of 96.00 to open barriers at 96.50 and more significant 96.77 peak of 28th of June 2012. On the downside, I said initial support at 95.80 ahead of a more significant 95.60 range top, while break below 95.30, 95.15, which is the recent range floor, and 61.8% retracement of up move from 94.61 to 95.86 would weaken the structure and bring bears back in play. The crude oil enters a very quiet phase of trading after regaining our key barrier at 87.00 2 days ago, 88.00 seen so far, with the price action currently hovering around 87.00, now reverted to support, moving within very narrow range of just a few ticks. And neutral tone dominates on the near-term 1 hour chart, while positive is still seen on the 4 hour. However, loss of the 4 hour chart still shows the strong bullish momentum, with some corrective action signaled by overbought conditions on the 4 hour chart of 88.00. Initial support comes below 87 as the first one at 85.80 previous peak. That also marks near 23.6% retracement and ascending 20 days moving average. More risk will be seen on the downside on loss of 82.60 and 82.00. That might bring the oil price back into the recent 87.77.27 range. For now, more positive tone again seen on the daily chart, but still not a firm break above 87 to confirm the current recovery, and the double bottom pattern at 77.54 and the 77 27. Negative tones that are coming from the Iran and the current crisis in a conflict, still verbal conflict between Iran and the Western world about closing the Hormuz Strait, and the recent Iran's military exercise when some longer range missiles have been launched, keep the oil price supported. However, quite a gloomy outlook in the world economies increases fears of further decline and further lowering of the world demand for the energies that keeps the pressure on the oil price, as it still remains in the strong downtrend of yearly peak at 110.53 and the lower top at 106.41 of top of 1st of May, where basically the losses have accelerated, dipping so far to 77.27 low posted on 28th of June 2012. The gold short-term price action shows the yellow metal is well supported after bounce of the critical zone from recent low at 1550 zone, broke above the daily Ichimoku cloud, with Ichimoku studies now turning giving more positive signals at this moment. However, a further extension higher is required to confirm and regain of our barriers at 1633 and 1640 required to confirm this, as descending 90 days moving average at 1627 still keeps the upside limited. Risk is seen and the downside remains still vulnerable. Break above 1627, 33 and 40 is required to confirm stronger recovery and possibly open way towards 1670 and 1700, our next strong barrier, where is also 61.8% retracement of the larger down move from 1790 to 1526 low of 16th of May 2012. 200 days moving average currently stands at 1660 and is the interim barrier between 1640 and 1670, 1700 levels. On the lower time frames, the positive structure still exists on the 4-hour chart, but significant loss of momentum sees a potential of a possible further easing of the correcting of the recent rally from 1548 that peaked at 1627 with the immediate 23.6% at 1606, along with the 20 days exponential moving average and the previous high, offering a strong initial support. A risk will be seen on the loss of 1600 as psychological support, but to turn focus lower, we need to see break below 1587, approximately 50% retracement, and a higher low of 2nd of July 2012. That will be that's seen as a break point, and to turn the short-term focus again towards the downside and the turn risk towards critical support zone at 1530, 1520. That was all for today. I would like to thank you all for being with us. We are back tomorrow at the same time at 7:00 GMT. Again, a busy day ahead of us today and tomorrow with some key releases seen in these 2 days and a lot of action expected in the markets. Expect to see you back tomorrow. Until then, wish you a nice day and successful trading. Good luck.